Hi, this is the Curious Martian. In today's episode, we are going to talk about the rise of decentralized finance. Decentralized finance is popularly known as DeFi, and we're going to talk about how it works and how it's replacing the current banking system. So let's get started without wasting any time. You may have noticed that decentralized finance is booming, with the total locked value in assets placed in transactions increasing from 700 million from December 2019 to over 200 billion at the start of 2022. This amount is similar to the Greece 2017 GDP. However, we can't move forward into DeFi without introducing blockchain. Blockchain is the underlying technology that is the backbone of tools like Bitcoin and allows us to transact finance in a decentralized manner. Furthermore, blockchain enables various companies to keep a copy of transaction history, ensuring that it is not controlled by a single intermediary source. While throughout history we have used centralized systems and human gatekeepers, this system is no longer scalable as there can be a single point of failure. And DeFi leverages blockchain technology in an unusual way where it extends it beyond simple asset transfers to complicated financial applications. Firstly, we should learn that Bitcoin is not like the other payment methods that we come to know like Visa and PayPal, because they are not a middleman to the existing financial institution. Rather, it's a technology of a new way of transacting. For example, if you use a credit card to pay for coffee in a cafe, the financial institution remains between you and the business, meaning that the credit card company can always cancel or decline your transaction, even if you have the funds. We've heard many cases of when PayPal actually froze accounts of many people. And this leads to DeFi's key advantage is that it eliminates all forms of transactional middlemen. Before it was known as decentralized finance, the DeFi concept was known as open finance. So even though DeFi sounds like a new concept, it actually shares the same utility use cases of the real financial world. A few DeFi examples include stablecoins and services such as crypto exchanges and loan services. And my favorite of which are smart contracts, which comprises of terms and conditions required for transactions to take place. So this is basically custom code that is stored on the blockchain to specify when to send a payment or pull a payment. However, if a specific criteria specified in the contract are not met, the deposit may be forfeited. And all of this is actually done by code, not by a bank or other institution. All of the components of a distributed financial system are actually housed in the software stack. Each layer's components are intended to serve a specific role in the construction of a DeFi system. Because the components from each segment can be combined to construct a DeFi application, stability is a distinguishing quality of the stack. As a result, the DeFi stack is made up of 4 layers, which we will get into. The first layer is called the settlement layer. It is also known as layer 0 because it acts as the foundation for all transactions. This settlement layer consists of a public blockchain and also the digital currency itself. The digital currency is usually used to pay for transactions in a DeFi application and may or may not be sold on the open market. For example, for Ethereum, the settlement layer is called Ethereum, which is the public blockchain. However, its natural token, ETH, ticker ETH, is what is traded on the crypto trading markets and is also used to transact on the Ethereum blockchain. Following the settlement layer, we have the protocol layer. As DeFi agreements are interoperable, which means that they can be utilized by multiple applications. Think of it as like back-end open source code that any UI application can enable. DeFi receives natural credit from the protocol layer. For example, Synthetic, an Ethereum-based trading platform, is an example of the DeFi protocol. Following that is the application layer, which is ranked 3rd. It is, as the name implies, a layer of the app where the customer-facing programs are located. These applications provide fundamental agreements as well as basic customer-focused services. This layer houses the most frequent applications in the digital financial system, such as financial exchanges and lending services. And then finally, there is the aggregation layer. This layer joins the prior layer's applications to give service to investors. They may be able to make money transfers between different financial products, for example, to increase earnings. Such trading methods will necessitate a significant amount of documentation as well as reliable connectivity. Borrowing and lending are 2 instances of services in the context of integration. Now I hope you have clearly understood what DeFi is and how it works, but if there is still any confusion, then let us know below in the comment box. Alright, now it's time to move forward to the specific use cases of DeFi. The first use case on the list is the DeFi use in the insurance industry. While the current insurance system is plagued by complex audit systems, paperwork, and cumbersome claiming procedures, the use of smart contracts has the potential to make it much more efficient. This can be done by having a bunch of people pull into a insurance smart contracts where payment would be released to the people who buy the contract if it meets some certain conditions. For example, if a flood were to hit, then the payments would be dispersed. Inflationary pressures and falling interest rates in fiat currencies have made it difficult for middle-class people around the world to save and invest. DeFi ventures such as Pull Together, Dharma, and Argent have provided alternative solutions for risk-free savings and investments through no-loss saving mechanisms. Other than saving, borrowing and lending protocols have also become very popular in DeFi, as it can do what traditional banking systems do as well. Several DeFi ventures, including Compound and Pull Together, are focused on peer-to-peer lending and borrowing sector. DeFi technology has also accelerated transactions, in particular in the case of cross-border payments. This is actually one of the main reasons why El Salvador adopted Bitcoin, because of the remittance costs of transferring funds in and out of the country. Then comes the separate payment solution apart from the banking system, as mentioned earlier, where you don't have a middleman. Serving the unbanked or underbanked from the start was the key impetus for DeFi. DeFi's inherent characteristics makes it well suited to resolving the problems of today's global payment systems. In comparison to legacy systems, DeFi provide faster, safer, and more transparent alternatives. As DeFi eliminates the need for middlemen, making payments easier and more transparent, DeFi-based blockchain and payment systems may become increasingly appealing to the unbanked population. Another point that I want to make is that the blockchain in DeFi does not have an inherent KYC protocol built in. The traditional financial system puts a strong emphasis on KYC, or Know Your Customer. So KYC is a standard that the government puts in place to combat things like AML and CFT. AML meaning anti-money laundering, and CFT meaning counter-terrorism financing. KYC can be implemented into DeFi, but it has to be done on the application layer. In the base layer, protocol layer, there is no such built-in mechanism. However, there is another type of mechanism built in. DeFi on the base layer addresses this problem with a mechanism called KYT, which is Know Your Transaction. This method implies that the decentralized infrastructure would prioritize the transaction patterns and digital addresses over users' identities. As a result, KYT is really good at monitoring real-time behavior of transactions. However, it still preserves the user identity at a core level. As a result, KYT is a nice feature that is important for decentralized finance. The last and definitely not least use case that I want to bring up is asset management in DeFi. One of the most significant advantages of DeFi is that users now have control over their assets. Many DeFi initiatives include solutions that let users manage their own assets and also lets them lend it out and manage it so that they can adjust the risk that they want and get the returns that they need, rather than blindly giving it to a bank and letting them do whatever they want with it. As a result, consumers are more transparent about the risk that they take and also more transparent about the interest and return. And not only that, in contrast to the traditional banking system, DeFi allows consumers to keep their sensitive data private. In the banking system, you might be familiar with going to their website and logging in using a username password. There are different DeFi initiatives such as MetaMask that are assisting users in encrypting and storing those pieces of information on their devices and using it as user login without even having a password. Out of all the practical use cases mentioned, let me know what your guys' thoughts are on them and which one is your favorite. Mine is probably the borrowing and lending using a peer-to-peer network, because there is just so much potential there. This is because banks used to make all the money on the lending, and now users can put up their funds and also earn a return by lending it out to others. This goes the other way as well, maybe as a borrower of money to purchase a property or more stocks. You can have a cheaper interest rate by borrowing from others rather than a financial institution. Before we wrap up, I just want to bring up another cool problem that DeFi can actually help solve, which is in the gaming and esports industry. The days of video games being nothing more than just a means of entertainment are gone. Since the majority of new video games include in-app purchases and loot boxes, they allow users to purchase these items with actual real-world dollars. Users can now, instead of buying an in-game item, they can have an NFT that represents the in-game item, which they can sell on the open market. Gaming isn't the most widely adopted use case of DeFi yet, but it is definitely something to watch out for, and it is an emerging technology that is taking the world by storm. Now that concludes today's episode. I hope you learned a little bit more about DeFi and its practical use cases in the real world. And if you enjoyed this content, please like the video and most importantly subscribe to our channel for more videos like this. If you have more questions, please don't hesitate to leave them in the comment section down below. Thanks for watching, and this is the Curious Martian, and peace out.